Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. Nifty has faced price rejection several times in the past few sessions in the gap zone of 16 January, closer towards 22,000 levels. Due to the price rejection, once again the index fell 0.97, led by weakness in FMCG and private banks, while IT and energy stocks played a more supportive role. Bank Nifty once again underperformed, ending the day down 1.76%, which could be attributed to the aforementioned weakness in private banks. Looking at despite the all the major events coming to an end, that is the interim budget, Fed policy, and RBI monetary policy, India VIX is still gradually inching higher towards the levels of 16. Key levels to watch out would be 14 and 17.50. Both these levels are critical, considering them being important Fibonacci retracement levels of the entire down move from 33.97, which was seen on Feb 22nd, and that was the high which was formed, and in May we had seen a low of 8, that is May 23. So if you see the entire Fibonacci retracement, these are the crucial levels to watch out, that is 14 on the downside and 17.50 on the upside. Till India VIX sustains above 14, it could inch higher towards 17.75, 18 levels, indicating choppy trading moves for the next few sessions. Above 18, it could inch up towards 21 in the near term. Hence, we feel that from here on there could be a steady rise in volatility with the general elections approaching, and hence one should reduce leverage and regularly keep booking profits at higher levels. Also, one should reduce exposure in mid caps and small caps where the results are not coming in line with the price moves. A quick check on the global markets. S&P 500 is an all-time high, displaying strong momentum through the week. Although looking at the charts, it seems that until the index is trading above the support levels of 4,920, it can trend towards 5,130, followed by 5,170 in the short term. However, the scenario of dollar index, US 10-year bond yields, and equity markets moving up together is not too frequent, and this equation needs to be carefully monitored. Coming back to Nifty, the resistance for the index is seen at 21,800, 21,840, while support is placed at 21,600, 21,640 zone, which is a confluence of the 10-20 EMA zone on the daily charts. In case 21,590 is breached, index could witness a further slide towards 21,470, 21,400 zone on the downside. Above 21,840, the index could witness a rebound towards 21,930, 21,980 levels. Nifty futures ended the day down 0.89%, while the cumulative OI increased by 0.07, indicating short built up. Nifty PCR is still weaker at 0.72. So if you see short put writing is seen at 21,700, 21,600 strikes, while on the call front aggressive writing is seen in 21,800 and 21,900 strikes. The overall range for the coming few sessions could be 21,850 on the downside and 21,950 on the upside. Bank Nifty, if you see, has been consistently underperforming Nifty and the major sectoral indices, other major sectoral indices, mainly to do with the underperformance seen in the private banking counters. No sign of any bottom formation are in sight at the current juncture. Going forward, the zone of 45,400, 45,500 is likely to act as a resistance, while support is seen at the zone of 44,600, 44,700 mark. In case 44,600 breaks, the index can test its next swing support placed at 44,300, 44,200 mark. While above 45,500, Bank Nifty could witness short covering rally towards 46,100, where the 20 EMA is placed. On the open interest front, if you see, Bank Nifty futures lost 1.85%, while the cumulative open interest surged by 4.53%, indicating addition of short formation in the banking index. Bank Nifty PCR is presently at 0.56. Significant open interest built up is witnessed in 45,300, 45,400 calls, and on the put side, if you see, it is mainly seen in the 45,000 strike, 44,800 strike. So implying a broad range of 45,500 on the upside and 44,600 on the downside for the day. Stocks and sectors in momentum. So oil and gas constituents such as BPCL, oil, Hind Petro continued to see sustained momentum and are still looking strong on the charts. From the large cap space, if you see, the sector which is outperforming is relatively the IT stocks. The likes of TCS, HCL Tech have witnessed outperformance and are looking strong on multi-time frame charts. From the broader market, if we see, bullish setup is observed in Hindalco, Coal India, Cummins, Trent, MFSL, Max Health, Elchem, Concor, JSW Energy, Voltas, Zydus Life, Lupin, BDL, LG Equipment, Cochin Shipyard, and KPIT Tech. Coming to the FII DI data, in the cash segment, FII sold to the tune of 4,933 crores, while DIs countered them to the and bought to the tune of 5,512 crores. FI long short ratio for index futures worsened to 32.67 on a net basis, this as they sold 12,409 index futures. On the stock futures front, FIs have sold to the tune of 81,269 contracts, while on the options front, FIs sold 31,699 call contracts and bought 34,148 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.